The property market has done a full 180. We've gone from a downturn and looking like the Australian property market may finally crash to now it's turned into a full-blown bull market, and it looks like property prices could go to the moon. In this video, I'm going to go over the reasons why the Australian property market didn't crash, and I'm going to go over the latest housing market data to see how much property prices have gone up over the past months and over the past 3 months, see what markets are the best performing markets, and look at the property market outlook for 2021. Let's get into it. If this video brings you value, please like for the holy YouTube algorithm and comment your thoughts below. What do you think is the reason why the property market has done a full 180, and what do you think will happen to the property market in 2021? And subscribe for more awesome content on the Australian property market, economy, personal finance and investing. Okay, so firstly, let's go over why didn't the Australian property market crash and why all the experts got it wrong. Well, the first thing you need to know is the Australian property market isn't a free market. It's 100% manipulated by the government and the Reserve Bank of Australia to keep property prices up, because a lot of Australians' wealth, over 50% to 60% of our wealth, is tied up in housing. So if that goes down, the whole country goes down. So first things first is unemployment, and unemployment is high, and people think that's going to have a significant impact on the property market. But as it turns out, most of the people that did lose their jobs were people that couldn't afford properties, between $700,000 to $1 million anyways. And most people that were earning good income are now in a better position than they've ever been. So they've been able to go out there and buy properties and keep property prices going. And those people, that did lose their jobs, sadly, those weren't people that were going to be buying properties, like I said, close to 700,000 or $1 million. And even though we had the biggest drop of GDP on record, we also had the biggest amount of stimulus on record, where JobKeeper and JobSeeker were announced to keep incomes going, and some people were making more money on JobKeeper and JobSeeker. So that didn't really affect the economy in that regard. Businesses were allowed to trade while insolvent, so then the businesses weren't going to go out of business, and then they could keep their properties. They don't have to force sell their properties. So then that's what supported that sector. Banks just keep on extending the mortgage holidays. So, in a normal scenario, if people couldn't pay their mortgage, the banks would tell them to sell. But in this case, banks are just letting people to be able to sit in their properties as long as they want. Kind of like what happened in the US, that property prices were falling too much. So then the banks just stopped foreclosing on people and just let them stay in their homes, and they didn't have to repay. And some people, I've heard, are still not repaying in the US. And there's been many schemes or incentives for people to buy property created by the Australian government, like the home builder scheme, which was $25,000 to build your own home. But some people, building in regional, they get another $20,000, so that's $45,000. They don't have to pay stamp duty, so that's another savings around $15,000. They don't have to pay LMI with the government 5% first home buyer deposit scheme. So in some cases, some first home buyers are nearly close to $90,000 to $100,000 better off by these schemes, and that's more money they can do to go out there and bid up property prices. Also, home builder has been extended, and they always bring out these schemes with a very small window, so people FOMO into the market and get in, and it obviously works. And then it builds confidence and consumer confidence, and becomes a self-fulfilling prophecy by people thinking that these schemes will lift up prices. So then they go out there and buy, and then that does actually lift up prices. And the biggest factor to contribute to high property prices is interest rates have fallen substantially. More specifically, fixed interest rates. Fixed interest rates have, have gone from, an average of maybe 3.5%. Now many of the big 4 banks are offering interest rates lower than 2%. And when you factor in inflation and the tax write-offs, where you can write off some of the interest on tax, you're effectively paying a negative rate with the amount of quantitative easing and the huge amount of devaluation of the Australian dollar. And that's another reason why a lot of people have bought property, is because the Reserve Bank of Australia has done something they've never done before, quantitative easing, where they're buying government bonds. They first started their yield curve control, where they tried to lower the interest rate on the 3-year government bond. And that's why we saw 3-year fixed rate mortgages drop so low. And now they're targeting longer yield bonds, the 5-year and the 10-year. Then that means governments can borrow cheaper you know, at 0.1%, are pretty much, you know, getting free money to go out and spend, because there's not much more the central banks can do with monetary policy. So they're now relying on the governments to borrow and spend big. And many people say for every 1% drop in interest rates, property prices can rise 10 to 20% because people can service the debt more. And it's not so much about the dollar amount, because, you know, there has been people talking about the dollar amount of the debt, which is bad, but it's more about the serviceability. How easy is it to service a loan? And in a lot of suburbs, it's actually cheaper now to have a mortgage than it is to rent. So even though property prices are really high, it's actually easier to service them now because interest rates are so low. Like I was saying, you could have a mortgage at 200,000, but if your mortgage is 18% interest, it's actually, the monthly repayment will actually be more than a mortgage of 400,000 with an interest rate of 2%. Also, New South Wales is looking at scrapping stamp duty, so that's built more confidence. People may try to buy properties now before those schemes come in, because people may wait, you know, to save $15,000 when that scheme is announced, but then that may put up property prices, you know, 20, 30,000, and that's what all these schemes do. They say they do it to help first home buyers, but it just makes property prices go higher. And who it really helps is developers and investors and people that have multiple properties. And in Victoria, they've just recently announced they're slashing stamp duty by 50% for new homes, and they're giving a 25% discount on stamp duty for existing homes. So that's going to again make people have more money in their pocket to bid up property prices, and they'll be able to get in the market sooner. So they'll create more demand, and that's what's helping property prices. So that is just some of the many reasons why this property market has gone from a downturn to, you know, a boom, because the government has stepped in to make it just so attractive to invest in property. They're pretty much giving money away, giving free money to invest in property, and investors and the rich, they're going to take that free money because they know that the currency is being devalued heavily. People are a lot more aware of how central banks' policies affects asset prices, and they know when quantitative easing is done and when interest rates are lower, asset prices like real estate, stocks, precious metals, and even look at crypto, Bitcoin's booming at the moment, goes up. So now people are getting into the market because of these low interest rates, and it is creating a boom. And I'm going to go in now into the data to see what areas are the best performers. Okay, let's start with the worst performing market for the month of November. And what do you think it is? It's Sydney. Sydney property prices have gone up just 0.4% over the month. And you know, traditionally investors think Melbourne and Sydney is the best markets to invest in. And maybe over the long term, that's true. But right now, the smaller cities are outperforming the big cities. Over the quarter, Sydney is up just 0.3%. But over the year, it is still up 3.7%. So even though we had a small correction of between March and October of, you know, around 2.6%, on the average, and again, these are just averages, there may be some suburbs that have gone up more, and there may be some suburbs that have gone up less. So you really need to get into your suburb to figure out what's happening in your area. And units perform differently. Townhouses, houses on small blocks versus houses on big blocks all perform differently. So you need to find out what property you want, what area you want, to find out specifically what's happening in your area, because you can't just go off these averages by core logic. Now, the biggest surprise I've found is Melbourne has done a full 180, and it is now going from being, you know, the worst performing market and, you know, prices falling pretty quick, to now even Melbourne is rising, and every capital city in Australia is rising now. And Melbourne went up 0.7% in November. It's down 0.4% for the quarter, and it's down 0.9% over the past 12 months. So even though Melbourne fell just over 5% during from March to around October, it's still only down 0.9% over the past 12 months. Brisbane, and I have heard a lot of people, you know, are moving from Melbourne and Sydney up north to Brisbane, and Brisbane is performing pretty well, but still hasn't, you know, gone too nuts. Again, these are just averages. Brisbane's up 0.6% in the month of November. It's up 1.5% over the quarter, and it's up 3.2% over the past 12 months. So Brisbane definitely outperforming Melbourne and Sydney over the past 12 months, which many people probably wouldn't have thought of before. Now let's get into the markets that are absolutely booming. Adelaide has been a very strong performing market recently, and it's up 1.1% over the month. So it keeps these rates up. Prices could increase 12% over the next 12 months. It's up 1.9% for the quarter, and it's up just 0.8% over the past 12 months. Now let's look at Perth. Perth has been one of the worst performing markets over the past 10 to 15 years, where it fell peak to trough around 20%, but it's now rising strongly and it's looking pretty good at the moment. So Perth rose 1.3% over the month. It's up 3.4% over the quarter, and it's up 5.3% over the past 12 months. Hobart is also performing very strongly and has been a very strong performing market over the past 5 years, and is up 1.4% over the month, 2.9% over the quarter, and 5.6% over the past 12 months. Now, the two best performing markets over the past month, can you guess what it is? Canberra and Darwin. Canberra and Darwin are up 1.9% over the month. Darwin is up a huge 4.7% over the quarter, and it's up 5.9% over the past 12 months. The Darwin economy definitely wasn't looking good, but we are seeing a huge amount of demand in Darwin and prices are recovering. And Darwin was the most affordable capital city in Australia. So it looks like in recessions, people are flocking to affordable areas. And that's why we're seeing strong growth in Darwin. And Canberra has been the best performing market, up 7% over the past 12 months. So sadly, it looks like for all those people that were hoping there was going to be a crash or a correction, that it isn't going to be one anytime soon. The government has stepped in, the Reserve Bank has stepped in, and the market is now booming because of these schemes. They're just making it so attractive to get into property. Like I said, they're pretty much giving money away. Investors are going to get into the market because they're now seeing the returns. They will potentially start outbidding first home buyers, but even first home buyers, they've got so much incentives right now. They can get into the market pretty easily if they've taken money out of their super, which I'm not saying is a good thing to do. This is not financial advice, but this is probably what a lot of people have done. With the government 5% deposit scheme, that means they've got a 5% deposit for a property worth 700 to 800k. And a lot of people that maybe were renting apartments in the city, they're now wanting to have space and they're buying properties out in the suburbs and in the regions. And what everyone probably wondering is what's happening to the regional market. And the regional market is actually outperforming the capital cities, which again, a lot of people say, that the capital cities always outperform the regional markets. There's no growth, but there actually is growth, and it's up 1.4% over the month. And I think this was a trend, before the pandemic began. I brought land out here in Ballarat 2.5 years ago because I could see there's a lot more value out here in the regions. There's a lot more lifestyle benefits out here in the regions. And I thought, a lot more people are going to be able to work from home, work online, a lot more businesses being able to come online. So I think this is a trend that will continue. For all my loyal viewers and subscribers still watching, you're awesome. I know it's been a while since I uploaded a video. It's been nuts. I've just finished the build. I'm here in my new house here in Ballarat finally, after, like I said, waiting 2.5 years. I waited 2 years for the land to title. Then I had to wait, 5 to 6 months for the house to be built. But it is good to finally be here. I will now have more time to start uploading more videos. And I missed all of you guys. And of course, I'll see you in the next video.